Okay, we actually have two people today from HomeWise with us. We have Ida, who's the Director of Partnerships, and she'll be your contact person if you want to get started. And we also have Jesse Abrams, who is the co-founder and CEO of HomeWise. And HomeWise is a national Canadian mortgage technology company. Today, we're going to be talking about the exciting changes happening in the industry, and we'll try to save some room at the end for some of your questions for a little Q&A session with them. So like I said, make sure you put your questions into the Q&A or into the chat box. And without any further ado, we'll get started. Over to you, Jesse.
Awesome. Thanks so much, Christine. And I'm excited to talk with all of you today. And Eden and I are open to answering any questions as we go. So please use the Q&A, use the chat area, and also even offline. Eden will post our email addresses and phone numbers in the chat as well. So feel free to contact us at any time afterwards. So today we're going to be talking about what digital transformation means for home buyers and specifically for their financial advisors as well. And again, Christine, thank you for the introduction. Just a quick background on me. I'm the co-founder of HomeWise. We're a digital mortgage company. We'll get into that a little bit later. But my background has been a lot on the consumer side and on the data side and building up the marketplace for the up and coming generation of consumers, millennials, next time home buyers, and everyone in the financial sphere there. So as many of you might have seen, the Canadian real estate market is hotter than ever before. It's been a pretty crazy last 8 months. It wasn't expected. The CMHC thought the market was going to drop, but it really increased quite substantially. And that's big. It's big news for all generations because there's home buyers, there's home sellers, there's refinancers, and there's switchers. So it's a really interesting time in the real estate market. However, a big problem is I talked about those millennials or first-time home buyers. A lack of guidance is really leading a lot of them to think they might not ever be able to afford a home because home prices are increasing. While rates are low, they don't really know, can I afford a home? How much do I need for a down payment? And maybe these prices are going so to control, I'll never be able to buy a home. So let's talk about these millennials, the folks who like to take pictures of themselves outside wearing cool hats. They're also the ones who like to go for brunch. They're always on their phones. They're always taking selfies. But that's an unfair stereotype. This is a generation that's really helped us change the way we buy things with companies like Amazon. They changed the way we view content with things like Netflix. And unfortunately, they changed the way a lot of people date with things like Tinder. This is a big marketplace that is completely shifting the way other generations do things as well. But on top of that, they're the largest demographic in Canada, and they're becoming a major economic leader. They're also 45% of first-time home buyers are these millennial generations, and 75% of first-time home buyers are actually millennials. So a really big home buying demographic. But here's the key. While millennials are often the first to market when it comes to technology, they're not the only ones. Boomers, Gen Xers, all other generations often follow. I used to always tell a story. I remember when I got my first Motorola Razr, then my mom got one 2 months later. Then I got a BlackBerry, my mom got one 2 months later, but she got an iPhone before me. And that's a pretty interesting thing. This is now 10 years ago almost that this all happened. But the proliferation of technology is not just the young people do this thing. All generations now are taking on technology, and the shift has been massive, especially because of COVID. Tobias Lukia, who's the founder of Shopify, who's an amazing Canadian company, has said that technology has probably shifted 10 years into the future over the last 12 months of COVID. And they really saw that at Shopify when you saw e-commerce penetration increased at a massive level. It spiked just in April of 2020. But that also led to a crazy Black Friday. When you look at Black Friday this past year, there was a 76% increase in sales online. Now, a lot of people will say, okay, well, you can't go into stores and you have to do everything online. But expectations are changing. You don't go from that Motorola Razr I mentioned to iPhone and then switch back to the Motorola Razr. All the different generations now are moving to these new technologies, and the shift is going to be virulent across all different areas of business because of that, and being prepared is so important. So let's talk about this new home buyer generation now. They do a lot of research before doing anything. They often search 10 websites before purchasing something online. They also believe in convenience, instant gratification. If anyone is of this age range and knows people of this age range, you know there's a total lack of patience because everything is just expected in the palm of their hands, be it on their phone, on their laptop, or whatever it might be. They're also looking for simplicity and having everything in one place. When you think about music as a really interesting one, I remember probably back in 2001, burning CDs and having a full CD book of 48 CDs that had 18 songs each. And we thought this was a revolution because of Napster and LimeWire and all those things. Well, then iTunes came out and the iPod came out and everything was on your iPod, but you still have to download every song individually. But now companies like Spotify, Google Music, or YouTube Music, this is taking over because you could access any song at any time just from your phone without ever having to download it. So simplicity has really shifted in with this generation. Speed of efficiency is also really important. I was talking to someone this weekend, even before COVID, I don't remember ever taking a cab in the last 5 years, other than maybe leaving an airport, not having another option. And the reason for that is being able to see where your driver is coming through on your phone, be able to easily book it at any time. And the transparency of seeing the cost is just such a big value changer and such a big way to shift the marketplace. And we're seeing that across so many industries. And something to note, Uber started out of 2008. That's when the gig economy really happened. We had a major market crash in 2008, but that's when companies like Uber and Airbnb really started to take off, and consumers completely shifted the way they did things because of that. So let's talk about that new buyer and specifically real estate. Well, 94% of them use websites for home search, which isn't surprising because people are often online. But the surprising part is that over half of those people later found that specific home after they searched online. So in the past, when maybe you had your professional you're working with consistently sending you things, the information available has just changed the marketplace. There's a quote, "The deer now has the gun." And that's really what we've seen in this marketplace, is that the consumer has so much more information than ever before that they're able to make informed decisions because of it. But here comes the problem of that, is that 76% of new home buyers really want to buy a home, but they think it's a pipe dream because there's so much negativity in the media, especially surrounding first-time home buyers. The nice thing about that is that they're making a lot of money and they're the up-and-coming generation. Now, this study was done before COVID, to be honest, but it found that just in the GTA area alone, which is a small subset, of course, of Canada, there's 700,000 millennials who are looking to be buying a home over the next 10 years. You now expand that across Canada into all the different provinces and the territories. That's a massive group of people who are going into the home buying generation who might not have that education on what they need to buy a home. And here's an example of that. Only 40% of these home buyers are aware of the latest stress test guidelines. And to those of you who might not be exceptionally aware of the stress test, this affects how much they could afford, but it also affects what their options are from a mortgage perspective, because sometimes they may go directly to one bank and that bank is so heavily focused on the stress test while there might be other options available. And this comes into things like refinancing your mortgage. Because home prices have been going up so much recently, someone could refinance their mortgage now in a way they might not have been able to before, because their home has gone up so much that they own more of their home equity that they could utilize to borrow money against. Another interesting and really scary fact when you think about it is only half of potential home buyers shop around for their mortgage. And that is a massive thing. There's a picture of a bunch of shoes here from a video we have, because I always joke and say, it's like going to a shoe store that only had one pair of shoes on the wall, but those shoes cost $500,000. It's crazy. We shop around for everything, be it flights, whatever it costs to rent a car when you go somewhere, shopping for clothing, anything we do online, we're shopping around so much. But over 50% will go directly to their bank or one of Canada's banks for their mortgage. And they're not only missing out on thousands of dollars in savings, what's more important than this is there's potential penalties that could come by not finding the right mortgage. And I'll talk to that a little bit later. So fintech, this is probably something a lot of you are aware of here. So I might repeat a lot of things that you know, but there's a lot of really important stats as well that are important to know about with fintech and the modern home buyer. The way this marketplace finances is completely shifted online. There's all different ways to manage their money. There's different, and these are just the B2C ones. I'm going to talk about the B2B ones later. But there's so many services here that are available to these people to manage their finances that they've completely shifted their mentality and how they do things. And a big part of that is that fintech adoption is virulent. It's doubled just over the last few years alone. And this stat, again, was from the beginning of 2020. Excited to hear what the number is coming out of 2021, because people are not able to do things in person anymore, the shift is only going to be greater than ever before. If you look at the US with the growth of companies like Robinhood at an excessive level over the last year, creating this madness on Reddit and all these different places, this whole next generation is so much more highly educated because of the information available to them online before they even speak to their financial advisor. So when they are dealing with their advisor, they have a lot of information that they could pair and they need a lot of advice on, because a lot of times the information they're getting online is not as valuable as speaking to a human being who actually knows what they're talking about, because a lot of it's just hearsay and crazy things like invest in some sort of cryptocurrency with a dog. 60% exclusively use digital for their financial needs, and that's increasing substantially annually. This is something I realized. Of course, I'm part of a team that runs a tech company, but I remember when I got married, this is now 3 years ago, that was the first time I had been to the bank for years. And it was such an interesting thought to me that I just had not had to go to the bank for such a long amount of time, because there has been such a shift of people doing things online and doing things in different ways. And that's why we're seeing such a shift as well there. And that shift has been seen across multiple age demographics, and specifically this younger group that's the upcoming generation is they've gone from a few times a month to maybe a few to 0 times per year actually going into a financial institution. This is crazy. I actually think I just put this on here because I think it's a ridiculous stat. Banks aren't going anywhere anytime soon, but it's crazy to think that this generation, 1 in 3 of them believe that banks will cease to exist over the next 5 years. And if you look at the US, there has been a massive shift towards the challenger banks, like companies like SoFi, Betterment, Wealthfront, that are really shifting people away from classic banks to other options, but it's a pretty crazy number to throw there. I'm just going to move this so I can see this better. This is a quote that I really liked, is that the fintech revolution is really shifting and transforming the financial advisor. The quote says, "This helps clients understand their financial planning goes beyond their retirement account, and that I could be a helpful partner and resource far more than just investment advice." And I'll talk to this shortly, but technology has become an amazing aid for so many different areas of business, to not just say, oh, tech is going to hurt us. It's how could tech really build us up? And that's why you're seeing, this is a list that we pulled of so many different B2B based fintech companies that work directly with financial advisors. So these are a ton of companies across North America that their goal is to help financial advisors make more money, cut down processing time, and overall, hopefully make more money. And that's why we're seeing tech a shift from saying it's going to replace a company. And we've probably all heard this for years. I hear about realtors all the time, that technology is going to replace realtors, but it's not. Realtor growth has grown substantially over the last few years, and they're all continually growing with more and more technology. So it's going from replacing to becoming the catalyst for growth, which is why 60% of advisors plan to invest in new technology this year alone. And this is an important thing. I mentioned the company SoFi based in the US. A large focus of fintech is centralizing multiple services in one place. And that's really the idea, is how do we provide simplicity and transparency? This next generation, as much as saving money is important to them, they want transparency into what's going on. This isn't in the past, or maybe you wait for a letter to come in the mail once a month that you could slowly read over. There's so much information available online because of online banking, because of these fintechs who provide this information, that instant gratification is just so important, and transparency into what options are is just, it's such an integral part of the piece of the puzzle as well. And that simplicity and having everything in one place now more than ever before can be that trusted advisor. And I really like this quote, is that I think fee compression is a challenge for advisors, and we're seeing this across all industries, but proper use of these tools, which gives us more time and ways to understand clients, can justify it. Now, even our industry on the mortgage side, there's always talk about maybe our fees are going to get lower over time, but the more we're able to offer value to our clients, not only does it show more value and provide them that we are a trusted partner that's going to help them build to their financial goals, but also increases more ways to drive more revenue and make more money over time, and really justify it as the industry really shifts. Because while fintechs offer value, you usually can't have a conversation with them. And you think about a company like Wealthsimple. You know, you could check things on your phone, but when things go really bad and the market dropped back in March of last year, there wasn't really anyone you could call. You just have to watch your numbers dwindle. And if someone doesn't really understand what they're supposed to do, they can make some bad decisions, like sell their portfolio at that one time because they think, okay, I don't want to lose more. So the inability to actually have conversations with fintech creates such a big opportunity for the human advisors who have the technology in their back end to help them build out their business. And Forrester Research had a good quote that says, there's still things that a computer algorithm can't advise on. So there's a lot of value in financial advisors, and that's going to only continually grow more and more over time as financial advisors and all different folks in the industry start to embrace technology. And continue to is a key thing, because I know a lot of you are using a ton of technology already. And this is an important thing is the efficiency and scalability and opportunity of tech enables advisors to be the orchestrator of their clients' financial needs, expanding their toolkit and adding even more value and driving more revenue opportunities. When you look at this stat here at the top from CNBC, and this is again in the US, and the reason I like to use US stats is the US is usually 3 to 5 years ahead of us. So it creates that hindsight into where our industry is going to be going if it hasn't already. And a big thing for them is to scale to serve more clients. Technology allows us to be substantially more efficient, to do more things, reduce manual work. When you think about what a CRM could do by not having to have to follow up with clients in the same way, to have the proper check-ins, there's just so much more value we're able to create for our clients by utilizing this technology along the way. So now jumping into technology specifically and mortgages. I show this picture because buying a home is exceptionally exciting. And a lot of people look at this and think, this is what happens. You buy a house and it's all so exciting. The problem is that getting mortgages are exceptionally stressful. It's not easy. You don't always know if you're making the right decision. And a lot of times you don't know where to go. And I'm going to bring back this stat is that 45% of Canadian home buyers are first-time buyers and 75% of them are millennials. But 90% of them don't understand the mortgage process. This is actually from a study that I did years ago with one of Canada's biggest banks when I ran a data agency. We found that 90% of these new home buyers don't understand the process. This is as little as what the difference is between fixed and variable. That was actually the number one question that even came up is, what's fixed versus variable? Where can I take my down payment from? How much do I need for a down payment? And it's a really scary thing when you think that this is one of the biggest financial decisions in someone's life, and they don't know what questions to ask. And that's really where a financial advisor could help, because if you're someone who goes directly to a bank for your mortgage, they're not going to always feed you the information. They're not always going to tell you this is what a collateral mortgage is. And a collateral mortgage is not always something you want to be in because your penalty can be higher because of it. So being able to have that information available to you and being educated helps you save money off the bat and not just focus on rate, because too often people only focus on that one thing, but also focus on the long term of their home buying experience as well and their mortgage ownership. This is a big reason that we see 76% go online for someone looking for their mortgage. And honestly, for mortgage, because they've just bought a home or they're in the process of buying a home, they're doing research, they don't really want to meet someone face-to-face to do it. They want speed, they want efficiency. There still is human contact like phone calls and things like that, but online search is a pretty big part of the process. They're actually 50% more likely to find their lender online compared to previous generations, and that's 4 times more than just 5 years ago. This is a massive shift. The industry is not just shifting quickly online, it is such a virulent shift because of the mentality of home buying now that you do your whole search online. You search for properties online, you search for mortgage options online, and that shift is only going to be seen in future generations and other generations that are the Gen Xers and Boomers as well. And this slide is supposed to look exceptionally convoluted and scary, because that's often what happens when people do search online for their mortgage. It's confusion, there's discouragement. I talked about some of those articles about how basically says you'll never be able to afford a mortgage. These stress tests makes things harder. And as you can see, these articles are from 2018, because all the information, all the articles we're seeing now in 2021 about home prices increasing, well, if you speak to anyone who's been in the industry for 20, 30, 40 years, these are consistent things that have come up. Buying a home is expensive. How are you going to be able to afford a home? You'll never be able to buy a home. This next generation can't afford anything. But on top of that, if you look at the bottom half, when you go to lender sites or you go to those rate aggregator sites, it just shows some numbers. And what do those numbers really mean? And that's a big problem that we've seen in the marketplaces, is especially these first-time home buyers, they don't understand what the difference in rates means. If they're making the right decision, that can lead to a lot of lost money. And this is one of the #1 reasons why. Some of you might have seen that HSBC put out their 0.99% high ratio variable mortgage. This is about 4 months ago, and it created waves in the marketplace. But I can't tell you how many people we had come to our company and apply with us who applied to HSBC and didn't hear back for weeks because, well, service is so important. And you guys know how important service is for your clients. But on top of that, they start to hear about the potential penalties that could come if your mortgage is in the wrong place. So that article in the top left there shows that this woman, unfortunately, had a $30,000 penalty for breaking their mortgage. There's 3 different types of lenders that offer prime mortgages. There's your big banks like HSBCs, TDs, Scotiabank, CIBC, RBC. Then there's monoline lenders. Monoline lenders are companies like MCAP, First National. Some of you might not have heard of those lenders before, but they directly lend to clients. Then there's credit unions. Credit unions are like Duca Financial, Meridian Credit Union. They also provide other services like banks, but they provide mortgages. And their rates and their features are oftentimes just as good, if not better, than big banks. Not to say big banks don't offer great mortgages. We do a lot of mortgages through big banks for our home buyers who they might be right for. But the important thing to think about is, especially for first-time home buyers, the average first-time home buyer breaks their mortgage before the end of their 5-year term. So at the 60-month mark, that's at the 4-year mark, they're breaking the mortgage because, hey, maybe they met someone else and they're ready to buy their new home, or they want to refinance to extract some equity in their home, or maybe they got a new job in a different city, different country, whatever that might be. For all those reasons, they have to break their mortgage. The problem is, depending on what lender you're with, your penalty could be exceptionally different. And we're not just talking about a couple $1,000s. To show you this example here, with a specific lender like a big bank, that penalty could be $28,000 on a $600,000 mortgage versus $7,200 with a monoline lender. So that's why it's so important to make sure that your clients understand the intricacies of that. And overall, that's not something that's ever talked about, because when someone buys a home, they think they're going to be there for a certain amount of time, but it's incredible how often that changes. And more than half of buyers focus on valuable advice and recommendation as a key feature for their mortgage over rate. This was a really interesting stat that came to us through the CMHC, which is kind of interesting because so often when people talk about mortgages, do we hear rate? What's your rate? What rate did you get? And it almost becomes a match between what rate did someone get. But we've seen people save so much more money by getting a full-featured mortgage. And if you look at the US, Rocket Mortgage through Quicken Loans has very quickly become the largest lender in the US, and it's battling back and forth every quarter with Wells Fargo. But the biggest difference with Rocket Mortgage is it's fully online. You do it on your phone. You speak to an advisor on a phone call, a mortgage advisor there, but it's on your phone, it's on your computer, it's a digital experience. And the reason we've seen such a shift to people doing it is not because Quicken Loans offers the lowest rates. They don't. Their rates are very far from the lowest. It's because it's fast, it's easy, there's transparency. This is actually a page from our website here. Obviously, those rates are all the exact same, but the goal is that clients would actually be able to see the difference between the different lender options, the key features below that actually save them the most money. And that type of transparency is so incredibly important to consumers because it gives them insights on what's right for them. And you might save $14, $15 a month by having a rate that goes from 2% to 1.95%, but the ability to prepay your mortgage more quickly, to take out a line of credit, to not have a high penalty if you ever have to break your mortgage, could save you tens of thousands of dollars. And that's why it's so important for these home buyers to be aware of that. And this is a US stat, so I had the nice US flag there, but 50% of borrowers said they chose their lender based on whether they offered an online application. Now again, US is usually 5 to 10 years ahead of Canada in certain technologies. And let's say this is 5 years ahead on the mortgage front. That's a massive, massive thing when you think that 50% of buyers specifically chose their lender purely based on an online application. When you look around the market in Canada, there's not a lot of ways to apply for a mortgage online. Very few banks have any options for that. They might have their pre-qualification for their own checking account holders. But that's a big thing to think about, that's already happened in the US. And this stat was from 2020, and it's definitely shifted the last year with all the refinancers in the US. This is something we're going to continue to see in Canada with more and more people shifting the way they do things online. And that actually happened to me when I bought my first home. So I mentioned having worked with one of Canada's largest banks on their mortgage company, I learned very quickly that I wasn't going to go directly to my bank for a mortgage. What I did instead is I looked online. and I found a ton of rate aggregation websites that showed low rates and different rates of all different kind and different lenders whose names I'd never heard of before. And I applied to 3 different ones, and they all randomly called me telling me, oh, that mortgage isn't right for you for X and Y reason, or you don't qualify for this one for ABC reason. And it ended up taking so much of my time, and I had no idea if I was making the right decision along the way. So I called my realtor, and he put me in touch with a broker through a person. I had an hour-and-a-half phone call. Then I got sent a 4-page Microsoft Word document to print, fill out, scan, and send back. In-person discussions. I had to miss work as part of it. Then I had to go drive to my lender, who was about an hour from my office, to sign the documentation. And it was the classic there's got to be a better way moment, because I had no idea why the lender was chosen that I was with. All I got was the lender name and the rate. There was a total lack of transparency. I never knew where I stood in the process. And overall, I just didn't know if I made the right decision. And that's why our team started Homewise. Our goal with Homewise is to simplify and tailor the mortgage process online to save clients time, confusion, and money. I'll quickly take you through how we work and then how our program works with financial advisors. So it starts off with a really simple online application that takes about 5 minutes. And I mentioned how unfortunately these first-time home buyers they don't know that much about the mortgage process. So we try to make our application really easy. As you can see, there's extra information along the way that lets them know, hey, are you a first-time home buyer? I remember when my mortgage broker asked me if I was a first-time home buyer, I quickly Googled to see if that was a good thing, because I thought maybe this decreases the chances I could get a mortgage because I'm a high-risk buyer, because it's the first home I've ever purchased. So we just try to make the process as easy as possible in the application. Then I mentioned all those different types of lenders. We actually searched through over 30 banks and lenders. That's from the big names that you see on the list like Scotiabank and TD, across all other types of lenders, from A lenders to B lenders to private lenders. And I'll show that over here. We have those prime A lenders, but we also have credit unions. I mentioned the stress test earlier. There are actually lenders that we work with that offer prime A mortgages that are non-stress tests. So it allows clients to actually afford more. Or in certain situations, they might need a B mortgage, which again allows them to potentially borrow more money, get out of a private mortgage. There's a lot of people who unfortunately get into private mortgages, but because the housing market has increased so much over the last 12 months, this is an incredible time for someone to get out of a private mortgage and switch into a B mortgage or an A mortgage. Even if it is a B, they might switch from a 7-10% rate into a 4-3% rate with a B lender, and it'll save them a ton of money, and they can actually refinance to pay off their debts, increase their credit over that time to hopefully switch into an A mortgage within a year from there. So that was really important to us from our end, because we saw that if you're a consumer, you either go to a bank, or if you went to an individual broker, they maybe focus on A lenders or B lenders or private. So the ability to have a house of lenders allows a better financial decision for that client. From there, as I mentioned, you actually on the previous slide saw our new creative design. This is our older creative design of that. Clients will actually see their best 3 options, an overview of who the lenders are, and the key features below there, so they can make that transparent, informed decision. Once they choose their mortgage, they can see more calculations, see who their lender is, Evan, book a call specifically with him right there, and get set on their way from there. They also have A to Z support. So I mentioned Evan. This is a picture of Davika, who's another advisor on our team. We are a tech company, but we know how important the human side of the process is. We are tech-enabled humans. So every client is actually set up with a personal advisor from our team who takes them every step of the way, helps them understand those potential penalties, those key savings from those other features they might be able to use, and how they could leverage their mortgage. As I'm sure a lot of you know, mortgage rates are low and you're getting them a lot more money in the market. So to be able to leverage your home to refinance it at a 2.5%, even 3% rate, to get 5, 6, 7, 8% in the market, it's an amazing way to utilize equity to drive more revenue and to drive more income for someone through investments. So that's a really important thing that we try to do as well, is to provide advice on how to leverage their home to live a richer life. The key benefits for our clients is that it's online, it's free, it's available 24/7. Most of our applications are actually happening in the evening or on the weekends. We're unbiased. So this is a really important one, is we are completely lender agnostic. So we've noticed that that's a big thing in the marketplace, is that certain places you go to, they focus on certain lenders. Our goal is to be completely unbiased. We also offer quick approvals. That's really important in this marketplace. If you ever check some of our reviews, my favorite ones are always, I went directly to my bank and I'm still waiting on a pre-approval from them or an approval from them, I went to HomeWise and I got approved in 2 days from the exact same lender. That's the key of using our technology to really focus on the right customers to increase speed. And then we have a ton of helpful content. We always say it's content for the Twitter generation because no one wants to read a book on what the difference between fixed and variable is. Now, I mentioned that first-time homebuyer demographic, that younger demographic. Well, 75% of our applicants are actually first-time homebuyers, and their average age is 34 years old. And many of them, when they're looking for things, are looking for what they can afford or can they borrow against their mortgage. And these are really important things for a financial advisor, insurance advisor, whatever advisor it might be, to realize is that a lot of people don't know what they can afford. They don't know where to take money out of. They oftentimes don't know how to utilize things like a home buyer's plan where they can leverage their RRSP to put it into their mortgage. So there's just so many things that are available from the advisor side, the financial advisor, to provide advice to their client to make the right decision. And that's why we had advisors from across Canada reach out over the last few years since we launched our business in 2018, because they want to help their clients with one of their most important financial goals, which is home ownership. And this could be from multiple areas. So with us, we work with pre-approval, approval, refinance, and switch. On the pre-approval and approval side, I mentioned a lot of time it comes down to affordability, but also down payment advice, first-time homebuyer incentive, and of course, what mortgage options are available, because a lot of folks don't know where to go. On the refinance side, they want to understand how they can leverage their equity to borrow more money. And that's, again, I mentioned this a little earlier, is that leveraging those low rates to be able to do things with your money. But that's such an important thing to realize, is that some people have major debts, be it credit card debt, payday loans, whatever it is, while they own a house. So the ability to refinance their mortgage to pay off their debts allows them to live, obviously, a less indebted lifestyle, but also utilize that money to then invest with their advisors to better live a better financial life. And then, of course, switch to better options at renewal. What we found is, on average, on renewal, when someone comes to us, we're saving them at 18 basis points per client. Over 5 years of a mortgage, that could be close to $6,000 or $7,000 in savings for the average Canadian home buyer. That's fairly massive difference when you see that. And the reason for that is, on switch, generally clients are getting a message from their lender 6 months, 4 months before the renewal date saying, it's time to renew, here are some options. And the problem is, because it's so easy just to say, okay, I'm going to go back to my bank, they miss out on a ton of savings. And there's that classic Geico ad, 15 minutes could save you 15% or more on your car insurance. Well, literally a half hour to an hour of someone's time looking into switch options could save them thousands of dollars in their mortgage, both in the short and long term. On top of that, there's also reverse mortgages. That's something we do. Private mortgages and insurance. For those of you who aren't too aware of the reverse mortgage marketplace, that actually allows us for people age 55 plus to leverage their home if it has no mortgage on it, sometimes even if they do, to utilize that to live their lifestyle. So many people, unfortunately, pass away with a home, and all the money that they had in the home either goes to nobody or potentially to their children, who might not even need that money, but they die without having to be able to utilize all that equity they saved up in their home. So reverse mortgages are really taking off in the UK and the US, and they're starting to take storm in Canada. You might have seen some companies like Fraction or Bloom come up, but we see this as a really interesting way for people to utilize their homes to actually invest their money, to live a more financially set lifestyle in their retirement, and hopefully help their kids with things like a down payment for their home, university, or anything like that. And this is a reason that we actually created HomeWise for advisors. This is something that we launched last year. And what this does is it integrates our digital experience directly into our partner's experience. And I'll show you in the next couple of slides how that works. But the overall goal is we want to help you add more value to your clients, close deals faster, grow revenues, while providing the experience your clients are asking for. Those are the folks that are saying, hey, I want to go online to get their mortgage, and where do I get a mortgage? How do I get a mortgage? All those different types of questions. And sometimes giving someone an email address or a phone number isn't giving them the experience they're looking for. So how it works, we have two different ways that our platform works with our partners. The first one is on the left. This involves zero tech. You don't have to build it into a site. You don't have to do any technology. We could create this for you in about a half an hour. All we need is your logo. You sign up to our site, or we could sign up for you, and we'll send you your own URL. So it'll be homewisecanada.com/advocates, or it's actually homewiseadvisors.com/advocates would be the URL. And that URL could just be shared with your clients and they could apply. They'll go to your own co-branded site that would have your logo and ours, an overview of how the partnership works. Then when they're ready to apply, they can apply directly through the co-branded site, which you can see on the phone there. The nice thing about this is that we will see this in the back end. So we'll know that this was Abacus's client who signed up, and I'll show you what that means on the next page, but we'll keep you informed in the whole process. The other thing that we're starting to see on the right side is we have a lot of partners who actually want to add our application directly within their website. And that's a really cool thing because there's so much value you can create to your clients by actually saying, when they come to you and say, hey, where should I get my down payment? Where should I get a mortgage? They can actually apply with you. So if you had your website, our application can live directly within there, and it's a very little bit of coding that needs to be done. We supply the code, and whoever builds your site for you can just add that in there. We have some partners that we added into our site message within a half hour of us sending the code. So it's really simple, really easy. And the nice thing is it's totally integrated into your experience. But here's the really good thing about this as well. What we've heard from so many of our partners is oftentimes when they hand it off to someone else, they have no idea what happened, because you're dealing with someone who is dealing with the client themselves, and they might have forgotten to let you know what's happening, or it just wasn't part of the way they do business. What you see on the left side here is an actual dashboard that you would have on your end and our partners have. So when a client signs up directly through our site to do their mortgage application, you could actually see who has signed up, what their status is, how much they've been approved for, pre-approved for, the refinance, which advisor they're working with on our team. So you're kept up to date throughout the entire process. But almost one of the best things about that on the far right, which is unfortunately my bad Photoshop work there with that pig, you actually get to share in the revenue as well. So we provide a revenue share to all of our partners. That's a piece of the mortgage. And some of our advisors, some of our partners want to make that money for themselves. So it's a great way to build up more revenue for yourself, or they want to give that value back to their clients. So we have some partners who say, hey, I'm going to give you that. You get cash back by doing a mortgage through me that you could decide to invest back with me, or do whatever you want with that. We also offer other things that you might want, such as a will through, I know Wilson has talked to you before, Aaron Burry. So whatever you want, a client could come to you for a mortgage, and you can say, hey, apply online, get the transparency and amazing experience through my Homebuyers partnership, and you get a free will as part of it. So anything that our partners want in terms of either a revenue share for themselves to make more income, or to provide value back to their clients, whatever they want, we're open to. So our goal is really to create value for our partners and an incredible experience for their clients. No one is more important than the client in this experience. And the goal of this is provide even more value to your clients with a new offering. So as I mentioned, the client expectations are changing. I remember, again, I give the example of my realtor. He sent me an email address to email for my mortgage. So I emailed this person, then I had to set up a phone call with them, then I had to have my phone call, then I had to meet them in person. There was just so much noise in the whole process, and it had to be when they were available. The ability on our site to apply whenever you want. You can actually book a time with your advisor directly through your application or the email you get with your advisor at a time you want. So anyone who's used one of those Calendly type of links, you could book a time, a consumer, whenever is available for them that they would want, and our advisor will call them at that time. And then they could talk to their client through text, through email, through phone calls, whatever they want. We also have that modern integrated experience with a ton of unbiased lender options. That's a really important thing as well, because we have so many clients who have come to us and said, I went to my bank and I didn't get approved, but we get them approved to another prime A lender, no problem, because the options are there. So being able to provide your clients with a wealth of mortgage options and a wealth of just financial literacy when it comes to their mortgage is so important, because we even see there's clients who had a conditional financing offer on their home and lost their previous homes because their mortgage broker only went to an A lender, or they only went to a bank that was an A lender, but we got them into a B lender. And instead of getting maybe a 2% rate, they got a 2.99 rate or 3.49 rate for 1 year, because they might have been self-employed for a year in the past and didn't have the right documentation. Well, a year later, they get to refinance into an A mortgage. And for a couple $1,000s, they don't miss out on the home of their dreams. So that's the great thing of having options. And then we have a collaborative, dedicated Homebuyers advisor. So while Ida, who on my team over here is introed before, is available to our partners at any time, an individual advisor will also be assigned to every single client to give you updates to the process. And then the last part, of course, is that transparent dashboard, just to see what's going on with your client progress and just to have a full understanding of the opportunity with your client from there. And then finally, I mentioned the revenue share to grow your business and to continually scale. And another really nice thing about this for our partners is that the ability to share is exceptionally easy. It's not like there's a whole crazy thing you have to do. You literally just share your link with them. We even sometimes will share with you emails on how you can share it with your client, any one-liners. Ida's available, I'm available anytime. If you're confused on how to share it with your client, then we do the work from there. They're set up with the advisor after they apply. We take them through the whole process, keeping you informed, and of course, sharing the commission at the end of the process. Now, we get asked this question. Sometimes people do have a mortgage broker that they work with. So the question is, why us when you do have a broker you work with? I'll start with the first part, which I've hammered down a couple times, is that this new generation likes to do things on their own time. They like to do things online. They like to apply online on their phone, on their tablet, on their computer, whatever it is, but also 24/7. About 75% of our applications happen after 5 o'clock at night and on the weekends. I'm blown away by how many people apply for a mortgage at 2 in the morning, but it happens. Because a lot of times this is when people are thinking about their life, they're thinking about where they want to be. And the ability to have that availability for any time of day, any place is really important. Multiple lender options, I mentioned this a couple times, is so important for clients to find the best options. The dashboard and transparent advisors from our team to let you know exactly what's happening at each step. And then the most important thing of this all is being able to actually provide that value to your clients. So that when clients ask where to get a mortgage, you have that opportunity directly through your own website. And this is a big one. So I was actually talking to a very big venture capitalist firm on Friday about how there's 11 different touch points when it comes to get your mortgage. To buy a home. In the buying home process, there's 11 touch points, be it from your realtor to your mortgage brokerage or to your mortgage company, to your insurance, be it property insurance, car insurance, life insurance. Then you have to get your real estate lawyer. Then when you're moving into the house, you have to have movers, all those different things. Accelerating digital transformation has never been more important because it's never been easier. And it goes from this old disjointed model that we used to have where clients had to go to all these different places where the advocate's advisor could really be the center of the home buying journey, but also the journey for other solutions that they might have along the way. As an example, we've partnered with Sonnet Insurance to help clients get PNC insurance really easily online directly through our experience. Fineo to help them get life insurance because unfortunately, I'm sure you guys know better than me, mortgage protection insurance is a horrible product and life insurance is a far better service. So we don't have to work with these companies. If you have an insurance brokerage, if you want to do the process, we always say that to our partners as well. We're happy to refer those clients back to you to make sure you can provide them the right solution. We also partner with companies like Deeded along the way as well for digital real estate lawyer services. And then I mentioned Willful before on the will front to provide clients with a will. So the thing we always say is the next time your clients ask you where to get a mortgage, the answer is now you. The last thing I want to leave you guys with is that this article says it all, is that financial advisors need to change to succeed in the next decade. Because in the end, technology is not coming to take the job of the advisor. It's just not. We know how important we are in the process. But technology-enabled advisors will be the ones driving growth and customer value in the future. That's the end of this presentation. But of course, a lot of time now for Q&A, and I appreciate you all listening to this. And we'd love to, of course, understand more about your business and see how we could potentially work together. So that's my information down below, as well as Ida's. Please reach out if you have questions, you're interested in joining our Homebuyers Advisor program, and we'd love to help you provide your clients with the best mortgage possible.
Thank you so much, Jesse. That was really, really good. And we have tons of questions coming in, so let's get to them. That's great. It shows lots of interest. So
Okay.
a few questions. Do you handle commercial mortgages as well?
So we do have options for commercial mortgages. It's not our forte though. It's one where we do have options. As an example, we're doing a commercial mortgage right now because it's a unique situation. So they couldn't get an approval from their bank. So we do have quite a few commercial options, both from banks, monoline lenders, and private lenders who do commercial lending.
Perfect. And can you just again clarify the difference between an A mortgage and a B mortgage?
Great question. So an A mortgage can come from a bank like TD or from Scotiabank. It could come from a monoline lender like MCAP or a credit union like Duca. That's generally for clients who have credit score above 620. There's something called their GDS and TDS. Now, not to use annoying terms, that is their debt to income ratio. So if their debt to income ratio is below a certain level, usually 44 or 39%, they'll get into an A mortgage. Now on the B side, that's for people whose credit might be low, or unfortunately their debt to income ratios are higher than the allotted amount available for an A mortgage. And this is a really important thing for people to realize, because too often these people think I have to get into a private mortgage, and they're taking 7, 8, 9, 10%, 12% rates sometimes, but they can get into a B mortgage option. And we've had a lot of clients go to B mortgages. And one of the nice things about a B mortgage is it's usually only 1 year. And the goal is at the end of it, they can switch into an A mortgage from there. So overall, just increases their chances of being able to afford the property they're looking to buy or refinance.
Perfect. Thank you. A few advisors actually ask, because I know a lot of them work with Manulife Bank. Is Manulife Bank one of the providers that you work with, or no?
So we can work with Manulife Bank. We've chosen not to recently because we don't love the Manulife One product as much. We can. It's on our list of banks that we can work with. It's just we often see is when our clients work with Manulife Bank, they have to move some services over to Manulife, and it ends up actually eating into the market share of our partners that we work with. And that is unfortunate. What does happen sometimes when clients go to a bank for their mortgage is mutual funds are the first thing they're offered. So we don't go to Manulife, but if it was something that was important to you, we could provide that as an option.
Okay, that's great. Are you able to say how much you pay back to the advisor per mortgage that's placed with you?
The percentage, I'm not going to give the exact number right now because it is unique for each specific situation. It's usually based on a partnership deal. The thing is we can be very malleable. We always want to make sure our partners are happy. If they are getting a certain amount with a certain partner, we always want to make sure that if you are switching to us, you're getting the same or more with us to make yourself happy. So we'd love to discuss the options because there are multiple ways that we do this with our partners.
Perfect. That sounds good. Question about how many credit score checks happens for a client? Like, is it one credit score check to shop it, or is it multiple?
That's a really important question. And I manage our Facebook account still. So no matter how big we get, I still like to manage our Facebook account because I love to see the questions that clients ask to really see where they are. And I think that's a question I get asked the most is, will you be pulling my credit? Do you have to pull it 30 times for your 30 different lenders? The answer is it only has to be pulled once. And that's a big value add is if someone's going bank to bank to bank to bank to shop around themselves, their credit is being pulled every single time. We only have to pull their credit once every 120 days because that's unfortunately the rules is if they get a pre-approval and they don't buy during that time, we might have to pull their credit again if they want to get pre-approved again down the road. But only have to pull it once to go to all of our lenders. And that's a good value add for clients.
Yeah, that's great. Can you remind us again, what are the monoline lenders?
Yeah, so monoline lenders, mono one, they only do mortgages. And the reason that they're so great is there's names like MCAP, RMG, First National, a ton of really big lenders that do hundreds of billions of dollars of mortgage volume every single year, but they don't advertise. You don't hear their names because they only work through mortgage brokerages. And the big value for clients is because they don't have all that overhead of advertising, big offices, all those different things that some of the bigger banks have, their rates are just as good, if not better. I mentioned their penalties, they're much smaller. But also, there's many times that clients get approved for mortgages with these monoline lenders that they weren't able to with a bank because their options are a little bit different and there's just a little bit of more malleability. Now, not to say that they're better than banks when it comes to being able to get approved. There are some times that we'll say go to Scotiabank or TD for a client to get an approval in a different way, but it gives a different option for a client as well. My mortgage is with a monoline, just for context there.
Perfect. That's great. So you are available across Canada and also English and French?
So English, mostly. We do have French members of our team, but our focus is English Canada. We're available in every single province across Canada. We're licensed across Canada. If someone was in Quebec and they did want to speak French, we do have a partnership with a company in Quebec to enable the French language speaking if that was important for the client.
Okay, perfect. And once the mortgage is set up, do you have a site where advisors can see the mortgage, who the lender is, and the details and things like that?
Yeah, so that's the back-end dashboard that we provide to them. So that has a full overview. The nice thing is the friendly face of Ida is also available at any time. So we have full access to what's going on at each step of the process where clients are. So if, for example, you're ever saying, hey, how's Jane Smith doing on her mortgage? You could send Ida a message. You could send me a message, whoever it is on our team, and we can let you know in a heartbeat what the status is, what's going on, and keep you informed at each step. But you'll also have your back-end dashboard to see where your clients stand in the process as well.
Perfect. And then do you make an insurance suggestion? So if a client is asking about mortgage insurance, do you make a suggestion or not?
So legally, we have to provide an insurance suggestion. Having said that, if we have an advisor partner that actually is an insurance broker as well, we'd love to work with you on that to be able to give that right back to you in the process. So when we do sign you up and partner with you, we'd love to know if you do offer other services. That way we can make sure that, one, we make sure we don't get them into mortgage protection insurance, and two, we give you the opportunity to get the option on the PNC insurance, life insurance, whatever it might be.
Okay, perfect. That makes sense. When it comes to a lawyer, do you do anything on that side, or the client uses their own lawyer?
So we partnered with a company called Deeded, which is a video-based real estate lawyer company. We integrate them into our process. Now, if you do have a lawyer, though, that is preferred, if you do ever have anyone that's preferred for you, we'd love to work with your partners on that end. But our goal is we have these trusted partners like Sonnet Insurance, like Deeded, like Fineo, that allows us to really simplify the process. But if you do have your own trusted partners, we're happy to do that. And a big thing with our current partners is they are digital based. So with the clients not wanting to do as much in person, especially right now during COVID, they could do their real estate legal process over video chat with the Deeded lawyers. And we also give our clients $100 off by working with us through Deeded.
Okay, perfect. Great. Question here on how do you compare with the Nesto? You've seen them on Credit Karma app.
Yeah, the difference with Nesto is purely focused on low rate. So they are a low rate business. They only work with A lenders. And I mentioned that a big mistake clients unfortunately make sometimes is only focusing on the rate, when you could actually be spending a lot more money over the lifetime of your mortgage because of the potential high penalties or whatever there might be along the way. Our focus is more on holistic mortgage. And Nesto, when you apply with them, you'll see their low rate option. We actually provide three options. We provide fixed options, variable options, and low rate options with the full overview of the mortgage features as well. So that's a big differentiator, is they are focused on prime A lenders only on rate. We have A, B, and private lenders have great rates, but also focus on features as well to provide the best options for clients, not just based on one number.
Perfect. And I'll just clarify, there's a question about the relationship with HomeWise and Abacus, and Abacus is just bringing this to you. We met Jesse and had conversations to discuss bringing this information to our members, but there's no relationship other than that, just offering you some education about this new offering and HomeWise itself. So that's it. Do you offer solutions for agricultural lending?
Maybe. So the reason I say maybe is it's very much a case-by-case basis. Depends what part of the country you are, depends on the piece of land. So that is like the farmland agricultural question that comes up. So it's one of those, we wouldn't have your client apply through our site. We would put them directly in touch with our mortgage director to talk that through when it's a much more sophisticated situation like that.
Okay, that sounds good. And what about like secondary mortgages for rental properties, things like that?
100%. So we do rentals. So any type of mortgage really for residential, we cover the gamut on. First mortgages, second mortgages, residential mortgages, all across the A and B and private area. We help all different clients in that across Canada.
Okay, that's great. Is there a cost for clients to work with HomeWise?
It's completely free for clients. That's one of the things I always love to say to people when I have to present our business to VCs. So we are a venture-backed company. We have raised venture dollars. And I always like to say, it's faster, it's easier, it's more transparent. On average, we save clients $5,000 over their first 5 years of the mortgage, and it's completely free. So it's just, there's so much value add to clients. And I didn't even talk about the whole transparency side and the interconnected. So that's something we're always proud of, is the fact that it is a free process.
That's awesome. And there isn't a cost for the advisor to work with HomeWise either, right?
No, it's free and you get to make money or provide that value back to your clients. So it's a win-win for financial advisors. That's why, especially recently, we've seen a lot of financial advisors sign up with us, because it's like, it's just value add. You can make money, provide more value to your clients, and overall expand your toolkit into the new and more progressive areas that are coming, like the mortgage industry, where attrition, a lot of the time we've heard attrition for financial advisors, like where people take out money, is to put it into a mortgage. So might as well make money on churn. That's what we often say to our partners, is rather than losing that money from the client, make money off of it as well.
Yeah, that's right. A couple quick questions. We only have a couple minutes left. What was I going to look at? So is the information for clients kept within Canada?
Yes. Yeah, it's that my co-founder, Carlos, he used to be chief risk officer and head of operations at Mogo, Snap Financial, HSBC. He was COO of Itaú Banco in Brazil. He is a compliance machine. So everything with us is exceptionally private and kept based on the guidelines that we have to follow.
Perfect. Is there any cross-selling happening for any other products on your site?
Purely through our partnerships that are part of the home buying journey. On top of that, when someone does fund a mortgage, they do get some extra awards. Like if anyone uses Jiffy, the home maintenance app, you can get $100 off Jiffy, 20% off a will through Willful. So we do offer other partnerships, but for our partners who want us to cross-sell back to them, would love to send the clients right back to you to help you take advantage of that, especially with clients refinancing. There's so much extra money available in the marketplace right now. That's a great way to reinvest that. I mentioned I'm with a monoline lender. It's because I just refinanced my mortgage last month and took out an extra 20% more than I should have to invest with my financial advisor.
Yeah, perfect. And one last question in the interest of time. Do you have any marketing materials once an advisor signs up with you that they can use on social media platforms?
Definitely. We have a lot of marketing materials, and we can make it specific to you. So if you want to add your logo, your name, whatever it is, happy to share that all with you. And I think that to us is the best next step from here. Is both of our contact information is there. We'd love to set up meetings with you all to help get you set up, answer more questions, and tailor the experience to you, because we know how important the human experience is. So we have marketing materials, and we can really make it what's best for you and your clients.
That's great. Well, we'll have to call it quits there, but I really think this was a great presentation. Obviously, lots of questions. So people are very interested in lots of questions to how to connect. So definitely reach out to Ida. Her email is there at the bottom of the screen, and her phone number as well. So take note of that if you're interested in connecting. And thank you both so much. Thank you, Jesse, for a great presentation. I think that was really good. And yeah, lots of comments coming in now to say very informative and lots of great information. So thank you so much for being here.
Thank you, everyone. I appreciate your time, and I'm excited to potentially work with you.
And thanks everyone on the call today as well. Your CE credits will be in your tracker within 2 to 3 days. And like I said, reach out to Ida if you have questions and look forward to seeing you on the next webinar. Thanks, everyone.